Welcome back to the CryptoWorld channel, everyone. My name is Josh, and right now, Bitcoin has finally broken out above this significant area of resistance and is also breaking back into bull market territory here on the larger timeframes. And this is happening ahead of tomorrow's CPI inflation numbers, which I'll talk more about in just a moment, so definitely stick around. First of all, talking about the new CPI inflation numbers, which will be released in 1 day from now. In fact, that will be released at exactly 12:30 p.m. GMT time on the 12th of April. And as always, as soon as the new numbers get released, I'll be tweeting them out in real time over on my Twitter. So if you don't already follow me on my Twitter, make sure you're doing that. The link is down below in the description and in the pinned comment. But getting straight into the expectations for the year-over-year inflation number tomorrow, right now, the majority consensus is expecting 5.2% year-over-year from where it is right now, which is 6% year-over-year. So obviously that is quite a drop that we are expecting tomorrow. And according to the Trading Economics forecast, this is predicting 5.3% rather than 5.2%. So basically what this means is if the CPI inflation number comes in at around 5.2% to 5.3%, then that shouldn't really be a big deal for markets at all because the majority is already expecting that. Once again, the majority has already priced in for this number to be at around 5.2% tomorrow. But if the expectations are extremely wrong, then that is when we could see a lot of volatility. So for example, if we see a massive drop to the downside below where we're expecting at around 5.2%, and instead inflation comes in around the 4% range, then in that case, that would actually be very bullish. But on the flip side, if we see inflation come in above, well above the expectation, so above around 5.3%, then in that case, that could be bearish for markets. And basically, the further away from expectations these numbers are, the more volatile that would likely be for markets. And just a quick explanation of why low inflation would be considered bullish and high inflation would be considered bearish. It's basically all to do with the Federal Reserve raising interest rates and performing quantitative tightening or quantitative easing. Basically, as you might already know by now, over the last 1 year, the Federal Reserve has been performing quantitative tightening and raising interest rates to help bring down inflation. And as you might have already guessed by now, raising interest rates and performing quantitative tightening, which is essentially deleting dollars out of the economy, is bearish for markets. That reduces liquidity and means markets can drop further to the downsides. But on the flip side, quantitative easing and dropping interest rates stimulates the market, stimulates the economy, and is bullish for markets. That is a good thing for markets. And basically, the Federal Reserve will likely return to that style of monetary policy as they usually do. Once again, back to cutting interest rates and performing quantitative easing once inflation finally starts getting back down towards more normal levels, which is considered around 2 to 3%. And once again, right now it's at 6%, but tomorrow it is expected to drop down towards around 5.2% to 5.3%. So obviously CPI inflation is definitely on the right path, coming from a peak of 9.1%, potentially dropping down close to 5% with tomorrow's numbers. And so of course, this is just one of the many reasons as to why markets have been flipping more bullish in recent months, because the inflation problem is really starting to go away, which means the Federal Reserve might not be too much of a problem going into 2023, which means they could potentially ease up on markets. And obviously that is a good thing for markets, which is why we are seeing markets quite bullish, especially in recent months. But anyway, don't forget to follow me over on my Twitter to get these numbers in real time as soon as they come out. But anyway, now getting into the Bitcoin part of this video. This right here is on the 3-day Bitcoin charts. And right now we are finally seeing the first proper breakout here in the Bitcoin price above this significant area of resistance, which is sitting in between around 28,000 to 29.5k. And obviously, as I've explained quite a lot recently on the channel, this area of resistance stems from previous support that we saw throughout mainly 2021, but also here in 2022. And so obviously this is a big deal for Bitcoin breaking out above this significant area of resistance, but it would be even better once we see more confirmation, such as at least a 3-day candle close, but ideally a weekly candle close above 29.5k, or even better, if we see a weekly candle close above 30,000, that can provide more confirmation for this breakout to the upsides. And of course, the last time the Bitcoin price broke through this area on the chart heading in the bullish direction was late 2020, early 2021, which was of course a bull market. This was entering into bull market territory, and right now the price of Bitcoin, after a long 2022 bear market, is finally breaking back into this bull market territory. And on top of that, we are also seeing an invalidation of this large bearish divergence that was forming recently here on the 3-day Bitcoin chart. But as I've been saying time and time again here on the channel, even though this is forming, it has not yet been confirmed. It hasn't been confirmed at all, because once again, we needed to see some more confirmation that a lower high is actually in place here in the 3-day Bitcoin RSI, which we never ended up seeing. And of course, right now we are seeing higher highs form in the RSI alongside higher highs in the price action, which is no bearish divergence at all. So this is invalidating that potential large bearish divergence that was forming on the 3-day time frame. And this invalidation signal will be confirmed with the next 3-day candle close, for as long as the Bitcoin price is still at around 29 to 30,000 or above at the next 3-day candle close, which is in just over 1.5 days from now. And speaking of bearish divergences being invalidated, taking a look at the daily Bitcoin chart, and right now here on the daily time frame, this previous bearish divergence has now played out and is now invalid. And now usually we see bearish divergences on the daily time frame play out over around 1 to 2 weeks or so, and we usually end up seeing reduced bullish momentum after those bearish divergences, which can either mean choppy sideways price action or a slight pullback. It does not actually guarantee bearish price action, it just means reduced bullish momentum. And of course, that is exactly what we saw over the last 1 week or so, as expected, all the way up until we finally invalidated this bearish divergence just over the last 1 day with this recent daily candle close. Of course, we have confirmed a new higher high in the price action in the candle closes, which means if we were to form a new divergence, we would need to reconfirm that new divergence. And on top of that, we have seen a breakout here in the daily Bitcoin RSI, which is now sitting at horizontal highs. Now, technically speaking, if we see a crash fast from here and we potentially close this RSI on the daily time frame in slightly lower highs, we could still form another bearish divergence here on the daily time frame. But once again, for that, we would need to reconfirm that new bearish divergence. So at least for now, we have no active bearish divergence here on the daily time frame. This one has already played out and is currently invalid. And so now that we are seeing this happen, now that we are finally seeing a breakout above this significant area of resistance, what is next? What is the next price target to the upside or level of resistance to the upside? And well, for that, I'll be looking at the larger Fibonacci retracement tool from all-time high down to the bottom. And here on the logarithmic scale, on the logarithmic settings, we have the 50% retracement level sitting at around 32,500, which is also where we had previous resistance during May 2022. So once again, the next significant level of resistance here on the larger time frames for the price of Bitcoin is at around 32,500. But if you're taking a look at the Fibonacci retracement tool on the linear scale, this places the 38.2% Fibonacci resistance level at around $35,000 to $36,000, more specifically around 35.8k to 35.9k, so very close to $36,000. And on top of this being a Fibonacci level, this level also has significance based on previous support that we saw during early 2022. So once again, I'll be keeping a close eye on 32,500 and around 36,000 as the next significant price targets to the upside, acting as resistance levels to the upside here on the larger timeframes. And now taking another look at the daily time frame, but instead looking at the Bollinger Bands indicator, which is now expanding after a squeeze formation. And of course, if you've been watching my videos over the last couple of days, then you would know that this volatile move was just about to happen, because this Bollinger Bands indicator was predicting a volatile move is coming very soon in the price of Bitcoin. And obviously now this volatile move is finally beginning to play out, and obviously it is playing out in the bullish direction. Now, unfortunately, the Bollinger Bands indicator itself does not actually tell us the direction of the volatile move. It just tells us a large move is coming soon. But even if we don't know the direction of the volatile move beforehand, we can still actually profit from the volatile move by watching out for signals like breaking above resistance or breaking below support levels, like we did here on the 4-hour time frame. Obviously, if you watched my last video on the channel, I talked about this symmetrical triangle pattern on the 4-hour time frame as a trade setup. Obviously, if we break above resistance, that confirms a bullish price target, or if we break below this support line, then that would have set up a bearish price target. But considering the fact that we did end up seeing a confirmed breakout above not only this resistance for the symmetrical triangle pattern, but also this area of resistance right here, that set up a bullish price target at around 29,500 approximately, which obviously the price of Bitcoin quickly hit and even continued further to the upside. So even if you waited for this breakout or even the breakout above 29,000 in order to buy Bitcoin or enter into a long position, the price still pumped another $1,000 from there. So of course, that is how you can actually profit from a volatile move without even knowing the direction of the move before the breakout. We just wait to see a breakout either above resistance or below support, and then we take that signal to potentially enter a trade. Now, it is important to mention that that is not personal financial advice. That's just an example of how to profit from a volatile move without even knowing the direction of the move before the move has begun. And now, while we're here on the 4-hour time frame, it is worth mentioning that right now the 4-hour Bitcoin RSI is very overbought, which means I would not be surprised if we do actually see a bit of a cool off in the short term, either a slight consolidation or even a pullback here in the price of Bitcoin. But obviously this does not change the trend here on the Bitcoin chart. Right now in the short term and on the larger time frames, we are trending obviously in the bullish direction, as I've been saying pretty much every day since the price was down near around $20,000. And now if you're taking a look at the Bitcoin dominance chart on the weekly time frame, right now the Bitcoin dominance is getting extremely close to a possible breakout here above this significant area of resistance. And in case you're new to this channel, this area of resistance is sitting in between around 47.5% to 48.5%. And basically, if we end up seeing another rejection from this area of resistance in the Bitcoin dominance, like what we've seen time and time again over the last 2 years or so, then in that case, that would be a signal pointing towards an altcoin season, because if the Bitcoin dominance is going to the downside, that means Bitcoin's market share is going to the downside against the rest of the crypto market. So essentially, the altcoins are outperforming Bitcoin if we see the Bitcoin dominance go to the downside. But obviously, if the opposite is happening, if the Bitcoin dominance is trending to the upside, that means Bitcoin is outperforming most of the crypto market on average. So obviously, right now with the Bitcoin dominance still trending in the bullish direction here on the weekly time frame, this simply means Bitcoin is outperforming the majority of the crypto market. And if we end up seeing a confirmed breakout here on the weekly time frame above this resistance, then obviously that would be extremely bullish for Bitcoin, but not so much for the altcoin market. Now, it is important to mention this does not mean that altcoins will potentially go down against the US dollar, but what it does mean is, once again, Bitcoin Bitcoin would be outperforming the majority of the altcoin market if we see a confirmed breakout here in the Bitcoin dominance. And now, one reason why we could be seeing quite a move to the upside here in the Bitcoin dominance as of recent, especially, is because of the coming Shanghai upgrade for Ethereum, because that upgrade is less than 2 days away, and I will be going into more detail about the Ethereum Shanghai upgrade in my next video that I'll post tomorrow on this channel. So make sure you're subscribed to this channel with notifications turned on so that you don't miss out on that video. But anyway, speaking of Ethereum, getting into the Ethereum part of this video, this is on the daily ETH to US dollar chart, and obviously, as I've been saying this entire time, the price of ETH is still trending in the bullish direction on the daily time frame, forming higher lows and higher highs. And of course, the next significant area of resistance is still sitting in between around 1980 to 2040. So approximately $2,000 is the next significant price target, acting as resistance here on the daily time frame based on this previous high. And as for support, we have this previous area of resistance acting as new support, sitting in between 1770 to 1820. And now, if you're zooming into the shorter term, this right here is on the 4-hour ETH to US dollar chart. And obviously here in the short term, the price of ETH is still trending in the bullish direction. And as I said in my last video on this channel, this bullish trend continuation was essentially confirmed once we saw a successful bounce right here at around 1830 to 1840, because we were bouncing from previous resistance, now acting as new support. And on top of that, the price was also bouncing from this ascending line of support, and we saw a bounce here in the 4-hour Ethereum RSI from this line here in the RSI, as I also talked about in my last video, confirming the continuation of this bullish trend and more bullish price action to come, which we have now seen. But right now, as of recording this video, the 4-hour Ethereum RSI has recently just entered into overbought territories. And if you're looking at the last time this happened, that was right around here, around the 5th of April, and that was at a local high just before we saw a bit of a pullback in the price of ETH. So it is important to understand that right now we are a little overheated. Sure, we could go a little further to the upside in the short term, but we are due to see some sort of cool off, whether that's sideways price action or a slight pullback. Either way, both sideways price action or a pullback can help to reset the RSI, which can give us some more room to the upside later on, considering even if that happens, we would still be in a bullish trend because we're still seeing higher lows and higher highs, which is obviously a bullish trend. And now, if you want to know how to maximize your profits in crypto, no matter if the price is going to the upside, to the downside, or simply chopping around sideways, then make sure to watch these videos popping up right here on your screen. The video in the top left shows you how to make money if the price is going either up or down, and the video in the bottom left shows you how to make money if the price is chopping around sideways. But anyway, that's everything that I have to say for today. I really hope you enjoyed, and I'll see you all in the next video.